value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross, and Happy New Year.
Hey, thanks for having me back, Jim, and Happy New Year to you and anyone who's listening.
Ross, a new year and the stats are coming fast. Vancouver bragging about a 53% jump in home sales in December. What do you think about that?
I think that we're at a point culmination of a year of misrepresentation that will probably go down in the history books as being the most anti-competitive, the anti-home buyer in the history of Canada, Jim. And as we work our way through 2021, we are going to be debunking many of the myths believed about housing. So what I'll tell you, listeners, is that we plan to explain how much of what you've been told over the last 20 years is not only a fraud, but really one of the greatest cons, marketing jobs ever perpetuated at a global scale. What has happened in Canada is no different than what has happened in the United States of America. Today I saw a report published by Freddie Mac, the hugely bigger mortgage lending insurer in the United States compared to Canada's CMHC. We're talking about a mammoth corporation, Freddie Mac. And they put out charts claiming about house prices rising 11% in the United States, November, year over year. What they failed to tell their readers is, over the last 20 years, the average price reported by Freddie Mac had increased 3.93% annually each year. The average gain, compound average growth rate, was below 4%. In the United States, the average MLS commission is right around 4%. When you look at the commission rate charged on average over the last 20 years, which is what I'm talking about, the advent or for sale by owners, there's specific corporations down in the United States, the advent of purchasers going it alone, and the advent of discounted commission rates means that the average commission on average over those 20 years was around 4%. It's a little bit lower. Now, for me to sit here and say it's the same 3.93%, that the average house price has increased over that period of time, would sound too coincidental, but that's basically what's happened. Freddie Mac in the States, representing over 6 million transactions this year. In other words, they have the mortgage data. Unlike CMHC in the United States, they see the mortgage data, purchase application data on all their houses down there. So they've seen over 5 million prints. They're unable to read real estate data. Why? Because they believe house prices increased 11% year over year in November. I can create a 1% house price gain every quarter. In other words, every 3 months, I can create a 1% house price gain simply by shifting home sales. That's exactly what's gone on. How do you know this? How do the listeners listening here, or those that trust us to give them housing reports, know that what we're saying is the truth? Well, what I'll tell you is this. You believe what organized real estate has told you to believe over the last 40 years. Well, actually, it's almost 100 years in some parts of Canada. Not only do you believe it, but everyone believes it. The banks, CMHC, policymakers. You know, those government leaders who are flying all over the globe during a pandemic when we've been told to stay home, well, they own houses, and they believe their wealth is what the real estate agents have told them. If you look at your REBGV.org, the Real Estate Board of Greater Vancouver, and you go to their Housing Market Watch stats, they've got a great little drop-down menu that you can quickly check stats out. Now, whether you're listening in Toronto, whether you're listening in London, Ontario, whether you're listening in Ottawa, whether you're listening in Montreal, whether you're listening in Calgary, or you're listening in Vancouver, or somewhere in the Fraser Valley, you can all go to the Real Estate Board of Greater Vancouver website and check this out. Check view results for September of 2020, and you'll see that Metro Vancouver home sales and listings surged in September of 2020 by approximately 1,300 extra sales. They reported sales were up 56% in September year over year. When I look at that, I see 1,310 additional sales were reported this September versus last September. I would then expect to see over the next 2 months sales increase in those 2 months 1,300, because clearly the 1,300 people who sold their homes, extra people who sold their homes in September of 2020 were homeless at the end of September, and they had to find another home. Well, I mean, they could have found another home during September, but that means the people in August never bought a home in September. So we'll just jump in here at September when sales were up 1,300. I'm telling you, when I see sales up 1,300 in September, I expect to see sales increase 1,300 over the next 60 days. When I go to October, I see, wow, that's amazing. They've reported sales are up by 800. 1,300 minus 800 leaves me 500 owners of homes in September who sold who are remaining homeless. The Real Estate Board claimed sales jumped 29%. So they're up 56% in September, down to only up 29% in October. If I go to November, will I find those 500 extra sales? Lo and behold, sales are up 560. The average number of homes only increased 23% in November. Wow. So 500 and 800 equals 1,300, which is the exact same number of increase in September. Wow, that makes common sense. I wonder if the share of sales during those months increased to townhouses and detached homes and away from apartments. I'll let your listeners look, because what we're going to do now is talk about December, what the Real Estate Board released today. I'll tell your listeners is that we won't even begin counting December sales for Vancouver or Fraser Valley until Monday of next week, because the real estate agents who are active in the Vancouver Real Estate Board's geographical range and the Fraser Valley's geographical range have until Thursday of this week, possibly Friday, to report sales that took place in December. But let's not worry about that, because that's how we measure data. How many sales exactly did they report increased this December? Well, we had 1,300 extra in September. We had 1,300 extra combined in October and November. Are we going to see 1,300 in December? No, we only saw 1,150 or 1,050. We are now 250 sales short in December. So that means right now there are an additional 250 home sales that are short from the sales chain. I wonder if single detached sales jumped up in December of this year. I wonder if they were disproportionately at an increase, or, maybe it's just my confusion. I'll let your listeners look. We're sitting here looking at a 53% announced in the news headline for the second most important housing, well, technically the third most important housing market in Canada. Montreal outweighs Vancouver, by the way, for our listeners in Vancouver, although I know for you it's personal. Listeners in Vancouver, you're inundated with this ridiculous property ladder that you have out there. We're talking about a housing market here where they're now claiming a 53. So we had a 55% in September, 20s in October and November, and back to 50 in December. Wasn't that great news to end the year? Wasn't that fantastic news, folks, to end the year? That's just fantastic news. The truth of the matter is, with all of the real estate agents in the Real Estate Board of Greater Vancouver, all of them combined, they only sold an extra 5,500 homes this year. All of those agents, they only amassed an extra 5,500 500 sales. Understand, folks, this is how crazy it is when we read today's report. If you go into the inner pages of these reports, you don't have to be super housing market wise to be able to read them. You just have to take a minute to get rid of the noise that you've heard for the last 40 years and try to apply standard housing market math. Richmond only had 341 houses trade hands in the month of December. Richmond only had 341 homes trade hands. That means if you look down a street, you'd have to look down 241 houses before you see one for sale. You would have to look down the street another 241 houses before you saw the second house that sold. You got to look down another 241 houses until you see the third house that sold. That first look that you got, it's like going into a parking lot and seeing 241 cars and somebody pointing out one car randomly, and from the price that one car sells at this month, they're going to tell you what all 240 houses were worth. That is the insanity of what we have read in the news today. Home sales were up 56%, 54% in December by the Realtors Association of Greater Vancouver. Is a marketing statistic created to earn commissions. The house price illusion that is created by these marketing statistics are the reason how the Canadian economy can be brought to its knees. It's how our political infrastructure can be destroyed. It's how the amount of wealth you believe you have today can evaporate in 2 years. Now, for the listeners in Vancouver, I'll leave this with you because I've just gone after the local real estate brokerages out in British Columbia, probably for the 100th time in this show. I want to leave you with this. Each of your housing markets is not local. That is a myth, a marketing propaganda created by organized real estate to get you to have to contact a realtor because you don't have open access to MLS transactional data. If you did have access to that data, you would then have to have the ability to debunk everything that organized real estate has told you because you can't look at that data and see what's really going on. It takes years and years of practice to be able to do that. So let me explain it to you this way. In British Columbia, about 30% of your housing stock is two-bedroom homes. I don't care what CMHC or anybody else tells you. Remember, they can't prove anything, any of these bodies. I'm telling you right now, about 29% of your housing, 29 to 30% of your housing stock are two-bedroom houses. Those two-bedroom houses are a problem because your housing stock doesn't increase in the three-bedroom class of homes. When I look at a city like Vancouver, a staggering 22% of your housing stock is one-bedroom homes. 32% is two-bedroom homes. Now you can see where the problem is. Because if you want to step up to a three-bedroom home, a townhome, or a single detached house, the pressure on those houses far exceeds anywhere else in Canada. Victoria has a problem itself. Victoria has a problem too. We look at a thing called house price pressure, okay, or the average price per bedroom, okay? You need to know these metrics only so you know when you're buying a house what you're actually doing. It's one of the many things that we try to tell people. Everybody looks at the price of the home and complains. Well, let me explain something else to you as I'm talking to you. Right now, we're doing forecasts. As long as your house increases less than 0.7% annually for the next 25 years, your house should basically cost you nothing. Let me express that again. As long as your house increases in value 0.7% a year over the next 25 years, you'll be further ahead owning versus renting. That means 1 year can go up 10, and the next 5 it only has to go up, 0. But whatever the number is. That's how it works. Now it's a compound annual growth rate, so you have to take that into consideration. And this is for a first-time buyer. If you're a trade-up buyer, your gains have to be even less than that to break even. This is home ownership math. This has never changed in the 40 years of data that we cover, okay? In Vancouver, the first step in the property ladder is going to cost you, should be expected to cost you, $670,000. The average price per bedroom in Vancouver today is $509,000. It's almost double what the BC average is. If I go to Victoria, it's only $310,000. The greater Vancouver area is $365,000. And that's how it works, folks. As you move to a higher, what is perceived to be a higher quality neighborhood, your price per bedroom increases. The governments would have no problem housing everyone with an owner-occupied home in British Columbia at $270,000 per bedroom, as long as they didn't want to concentrate those homes in Vancouver. If you choose to live in Vancouver, if that is your choice, your life choice, and let's face it, it's a great life choice. You're on the ocean. You've got one of the best temperate climates in Canada. You have tremendous services from the government. I'll let you be the judge in the school systems and everything else, and the health systems and everything else. But your cost there right now is $509,000 a bedroom. Generally speaking, your first bedroom is going to cost you $670,000. Your second bedroom is going to cost you another $430,000. Now, at $430,000, right now we're looking at somewhere around another $1,600 a month. That's just the reality of it, folks. You can choose to move just outside, to the outskirts. In the greater Vancouver area combined, which includes Vancouver, okay, your average bedroom cost is only $365,000. I know you're not going to see this published anywhere else. I know that you haven't even heard it from us in the show. And that's because we have been waiting for 2021. We have been waiting for the market to roll over and for everyone who needed to divest of real estate to have that opportunity. It has taken place. And just so everybody is totally aware, nationally, across Canada, the most common housing type is a 3-bedroom house. The average price of a bedroom in Canada today is $180,000. What that means is, if you choose to live in Vancouver because of the decisions the federal, provincial, municipal governments have made, you are paying over 3 times for a bedroom that you have to pay on average across Canada. Home sales, folks, yes, they didn't lie. They were up 53% in comparison to homes that were sold by their members last December. The fact of the matter is, your housing market is so slow today that only 1 in 240 homes that exist in Richmond sold in the month of December.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener asks, can Ross give us some insights in where he thinks mortgage rates will head this year or next? Does he continue to endorse long terms in a mortgage?
Okay, so the first comment I would make is I don't need to be misquoted. What I say is that long-term mortgage rates have an insurance premium attached to them. So in other words, there is a dollar number of the insurance that you're going to pay to have the same monthly mortgage payment over the term of your mortgage. That premium is the rate differential that you're going to pay over that term. Mortgage lenders, Canadian banks, bankers, greedy bankers, the CEOs who are making millions of profits, of bonuses during the lockdown because of the security the mortgage portfolio provides them in Canada, the lending infrastructure they operate under. They have a calculation that they're able to do where they're able to forecast what they're going to make off of your mortgage. We do the calculation in the opposite manner. We calculate how much additional you're paying for the longer term that you're taking. We measure that payment, that cost, against the risk that you take by taking a shorter term. Everyone has a different measure of risk. There's some old saying, Jim, penny foolish, dollar wise, or dollar foolish, penny wise, something of that nature. Basically what it means is that you watch your pennies, but you don't watch the dollars that you spend. And this is the case when it comes to how home buyers are trained by the infrastructure that we live in and how to look at housing. They want you to look at the pennies and not look at the dollars, because it's easier to take a dollar bill out of your back pocket than it is to cram your hand down to the bottom of the pocket and take the penny. You need to be looking, when you're talking about mortgage rates, you need to be looking at the risk premium that you're willing to pay to ensure you have the same monthly payment on your house. And you need to divorce yourself from all the conversations that take place elsewhere. Meaning, if you read on social media somewhere about, you were foolish to take a long-term mortgage, you need not to read those comments. Because before you've taken that contract, before you've paid that insurance premium, you have sat down and rationally gone through the decision. And you have said, in your own family's best interest, does it make sense for us to be sure we're going to make this mortgage payment? Now, I'll tell you, this is how you should always look at a mortgage payment. As a homeowner, you have a tenant. That tenant is you. Your tenant is the one who's going to be making a payment on your house every month. Not only are they going to be paying your mortgage, they're also going to be paying for any renovation work you do, any maintenance work you do, your property taxes, whether or not you have to replace appliances, if you decide that your carpets are worn out, that they have to be replaced. Everything that comes along with owning a home, the tenant eventually pays for. In this case, you are the tenant. So when you sign a tenant up and you were to offer them a 10-year guaranteed rental rate on your house, I can imagine the smiles that those tenants would be smiling. They probably would pay a premium early in the tenancy, maybe the first couple of years, if they knew in the following 7 to 8 years that they would not have any increases. And that's how you should be looking at your mortgage. You really need to have what's called an estimated mortgage cost. The estimated cost that the mortgage is expected to cost you over the amortization period of the mortgage. Generally, the cost is calculated on a 25-year AM. When you sit down and you look at that number, you're able to make a whole lot of financial decisions, not only about your home, but also about the type of home you're going to buy, the cost of home that you're going to buy, how you're going to structure your savings, whether or not you're going to have money for your TFSA, whether or not you're going to have money for your RSP, RESP, whether or not you're going to be able to take holidays, whether or not you're going to be able to replace your car. You're going to have this number concrete in front of you to make a rational decision on. If you don't do that, if you walk into a bank and say to the bank, hey, will you qualify us for a mortgage? They'll smile, wink, wink, nudge, nudge, and qualify you for the mortgage. They may even tell you, as they do most home buyers, that they're going to fudge it a little bit so you can buy a little bit more expensive home. They're going to take you to the limits. So let me tell this listener how we view things. Mortgage rates, inevitably the cost of money will decrease somewhat before it begins to increase. You have to determine the amount of risk that you're willing to take on. If your wages are guaranteed to increase 10% a year over the next 5 years, and your mortgage payment increases 10% because unexpectedly rates rise, hey, no problem. You can absorb that. If you're only going to get maybe a wage rate with inflation, and you don't know what's going to happen with taxation in this country, with a historic amount of debt, which will place increasing pressure on the federal, provincial, and municipal governments to raise your tax rate. Remember, in municipal, your property tax is actually a income tax. You just don't calculate it the way that we do. Those taxes are probably going to increase. So if your wages increase with inflation, but your income, but your the total taxes owing increased more in dollar value than the percentage change, you probably wouldn't have enough money left over to absorb that increase in mortgage payment. Or if you did, you're going to have to compromise somewhere else. A well-structured home ownership decision is one that takes all of these events into place, and it puts you in a position where you're in control of the situation. Do you have job security? Yes or no? Do you have long-term job security? Yes or no? Do you have wage security or wage promotion security? Yes or no? Do you have pension security? Do you have to save money for a pension? Is your goal to live in your existing house when you retire, or is it to sell it and move to a smaller house? Because when we're having this discussion on mortgage rates, these are all the sort of things that you have to talk about. By focusing solely on the interest rate announcements made in mainstream media by mortgage brokers or websites that earn their money from selling leads for mortgages, you're always going to be at their mercy. Look, it's highly possible, folks, that the 300 sales we told you that were missing in December, remember we said we would expect about 1,300 extra sales based on the September, October, November numbers, and there was only an extra 1,070 reported, leaving around 300,000 or 230 missing. It's highly possible 230 people left the Vancouver housing market and liquidated their assets. We won't know that true number, although we will know it until sometime next week, because we have to do a granular search of the real estate transactions that took place during the month of December, not those reported by the real estate board as being in the month of December. We need the actual trades that take place. That's really where you've got to question yourself. There's people who left the housing market at peak pricing in 2016, and they left the peak price that we had in 2020. Are you going to be entering the housing market at that time? Are you going to be waiting? Are you going to be taking a mortgage interest rate today on a long term, or you gamble on the short term? The beautiful thing that we have in Canada today is this. Bank of Canada has said they're not going to raise rates for a year. So you probably have a year to play with. The Canadian banks have been playing a game since around mid-2019 with the Canadian home buyer. You don't know that they're playing this game with you, but they are playing this game with you. They're keeping a reserve in their marketing toolkit that they are able to unleash when the housing market begins to sag. But what I'll tell you folks is this. The home trading infrastructure that exists in Canada today never existed before the beginning of 2018. This home trading infrastructure that we're in right now did not exist in the history of the Canadian housing market up until the spring of 2018. Banks have way less leverage to manipulate the public than what they had consistently over the 40 years that we have been tracking data before that period of time. We knew exactly the game that the banks played and how they played it. Their ability to manipulate the market has been diminished. It's been diminished by the OSFI. Even if the banks lower interest rates, your mortgage qualification rules, folks, remain unchanged. You have heard everything in the paper. The reason why housing prices have increased in the last few months during this lockdown, because interest rates have fallen. Hogwash. The qualifying rate has remained unchanged during this lockdown. The OSFI ensured that it would. So, when you're looking at mortgage interest rates, demand that the details are laid out before you. Demand whoever you're getting your mortgage advice from provides you the estimated total interest that you're going to pay over the amortization period. Step back and look at those numbers at home, away from everybody else. Take a day or two to process it. Sit down and look at it long term. Determine what that's going to mean for your wealth accumulation over the next 25 years. And ask yourself, is that the step you're willing to take? If you can't get those answers, you've got to reach out and find someone who can provide them to you.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, we have a question from Ontario. Ross, we're looking for a house, but most of what we looked at since November has not been in the condition we were hoping to find. Many in our price range needed updating, which we can't afford. What are your recommendations for house hunters like this over the winter?
Well, my first recommendation would be you never buy a home when the quality of home that you're buying, per home buying dollar, is below the average. Never. Just don't do it. Because when it's below the average, you're purchasing during a period where you're not getting enough for your money. There will be periods, 2 to 3 months, over any 12-month period, where your buying power per quality increases drastically. There will be periods where it's extremely low. Right now across Canada, we are at a historical low. You're not going to read this anywhere, folks, okay? People don't understand. In the last 3 days, the number of homes listed for sale across Canada has dropped by 4%. Understand, folks, in the last 3 days, the number of homes for sale across Canada has dropped by 4%. Don't buy. That is a signal to not buy. When you have an actual sales count, an actual number of properties listed for sale, we are at a historically low divestiture rate in Canada. There are fewer homes per 100 for sale today than at any time since 1980. That means if you were to buy a home today, the odds that you're going to get a lower quality per dollar home is extremely high. So why do it? Look, odds are there are 300 or 230 home sellers in Vancouver who are now homeless and are needing to purchase their next home. Their hands are tied. Hopefully, if they sold in December, they have a closing date that is somewhere around May of next year. That will give them 2 to 3 months to find their next home. If they didn't get that advice and instead they sold out, hopefully they've made accommodations to move out of their existing home, put their furniture in storage, pods, leave it in a truck, whatever the deal is, and leave it there until they close in their next home, which they haven't even purchased yet. What we do know is this. We know that the policies of the federal, provincial, and municipal governments, the policies of CMHC, and the beliefs of the planning community across Canada has constrained the growth of backyards in this country. It has constrained the growth of backyards at the same time causing house prices to rise. What I should say is house price illusion to rise. As we said at the top of the show, Jim, this listener in Ontario, I hope, can sit back with a spreadsheet and a calculator and figure this one out on their own. If you live in the province of Ontario, let me check here while I'm talking to you, Jim, so I don't make any mistakes. If you live in the province of Ontario, okay, right now you are looking at about a compound annual growth rate over the last 25 years of under 6% for your home, okay? If you had moved if you had purchased your home 25 years before 2014 arose, so what's that? Around 1990? 1989 sound familiar, folks? If you purchased your home at the peak of the housing market in 1989 and you sold it in 2014, 2015, you only saw an annual compound growth rate of your house over 25 years of ownership of around 3.5%, or the average commission price charged in the province of Ontario throughout those 25-year period of time. I can create a 3.2% annual house price change by making minor adjustments to the sales mix 4 times a year. Why would you go out and buy a home today when you are answering the question yourself? I believe they claim, Jim, that they've been looking for houses, and how I interpret this is they're basically been looking at junk. They're looking at houses that need repairs. They're looking at houses that have been rejected by everyone else. Look, folks, when a house doesn't sell in the first 14 days that it's listed, that is now a stale listing. That house is the number of buyers active in the market, active at that price category, have rejected that home. They have said effectively, no, you're asking too much money for that house. Now, over the next couple of months, someone may stumble along that says, oh, we'll accept that. But more often than not, it's someone who becomes frustrated and simply lowers their expectations and buys it. After the fact, they have what's called buyer's remorse, which is generally over 80% of all home buyers in the history of organized real estate. Don't buy. If I'm going out there and I have a price point of $600,000 and I look at houses at $600,000, what I expect to be buying, and all I'm seeing is junk, or houses that don't meet my expectations, or houses that I'm going to have to spend an extra $60,000 on just to bring it up to the standard that I thought I was going to get, I'm not going to buy that house. What I may do is step down a category. I may look at a lower price category, say $500,000, and I see that what is the best I can buy for $500,000. If I find I can buy a high quality home for $500,000, then that's maybe where I'll make that adjustment if I don't want to wait. Timing a market means the difference between a compound annual growth rate over your lifetime of ownership of 6% or under 4%, simply by timing the market. This is not like the stock market where you really can't time it, because everybody can liquidate their stocks in a day if they have to. The belief is you can't liquidate real estate in a day. Now, of course, as I said on the show, I can liquidate any real estate in Canada and get the money in your bank quicker with real estate than you can with stocks, because that's going through all the processes, making sure that money laundering compliance is taking place, making sure that the taxes are taking place. I can liquidate real estate quicker and at less cost than you can liquidate stocks. I don't care what anybody says. I've done it before. I can do it anytime I want. I simply make a price adjustment less than what I would have to pay on a stock trade or taxes associated with a stock trade and liquidate the real estate in 24 hours. Easily done. Maybe 72 hours at the most. But guess what, folks? Housing markets don't change in 31 days. The value of your house doesn't actually change in 31 days. Doesn't change on the way down, doesn't change on the way up. House price collusion does. Housing bubbles do. Those housing bubbles create fear on the way up, fear on the way down. Fear of missing out on the way up, fear of missing out on the way down. Well, if I wait any longer, I'm going to sell for less. If I wait any longer, it's going to cost me more. Real estate salespeople have an answer to everything. You need to be sitting there with the data in front of you to make a decision. If you don't know the quality of home that you're able to acquire per home buying dollar in the category of home that you're looking at, ask the real estate agents why you don't have that number. It's not like there's not a plethora of publicly available data that everyone has access to if you know how to read it, and you know where to get it, and you know how to aggregate it. That's what I would tell this listener. If you're not getting the quality of home you're expecting to get per home buying dollar, don't buy it. Clearly, your timing is off.
Ross, thank you so much.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.